Great, thank you very much. Thank you. Good morning, good afternoon to you all. I'm delighted to be here with you, and I really appreciate you joining this session. Today's focus is a critical topic for finance teams as the pace of change around us seems to keep getting faster and more complex. We're really excited to talk about intelligent finance and how we are inspiring digital transformation. So as you heard, I am Nick Cox, and I am joined today by Mark Armstrong, my colleague who leads our UK sales organisation. We actually will take questions jointly at the end of the session. So onto the agenda, and we will focus today on the future of finance. So I'm going to just have a look a little bit at what we're seeing. We'll examine what is holding organisations back, and also discuss how finance needs to lead at speed. I will then give a short introduction to OneStream at the end, and then we'll move on to the questions. So the future of finance really is happening now, and we are living in a different era. We are living with constant regulatory changes and requirements. I mean, for example, lease accounting, tax laws, revenue recognition, just to name a few of the changes that we've seen recently. We face pressure to attract new talent, to keep them, and to develop them as future leaders. Of course, culture is very, very important in organizations, widely. And cybersecurity is top of mind for us all. We see firsthand what can happen to a brand if customer data is exposed. Of course, we must all be at the forefront in developing new business models, whether that be in how we go to market, e.g. kind of e-commerce, but also in how we enable the organization with insights and with agility to adapt and to change. And environmental and social responsibility is now much more than just the right thing to do. The good news is that there's an abundance of new technologies to help us address new demands. Some examples like robotic process automation, or RPA, you may have seen, in automating mundane tasks. Leveraging big data with predictive analytics to spot trends and improve forecasting. And now we've got machine learning and artificial intelligence that can really help us take a step further to improve decision making. So with so much coming at us, where do we start? What does this all mean to us? Well, I first wanted to contextualize transformation. Because it's everywhere, let's consider the car, and how many of you remember your first car? I can remember saving ferociously for mine, and wow, how the customer experience has changed, where we have gone through a transformation from basic function to what is clearly function forward. Let's consider, some of the basics as they relate to today's experience. Our old cars were simply built to get us from point A to point B. I can still hear my father telling me that that's all that mattered. We had a couple of little mirrors to see behind us, and the driver was the only one who could really interact with the car. Fast forward to today, where we are function forward. Our cars do literally everything old cars did and more. Our cars are tracking everything with digital dashboards and alerts on maintenance, fuel, tire pressures, the list goes on. Even the parts of our cars now have sensors which track data like IoT and intelligence. Our cars are drawing inferences on their surroundings and communicating with us. Apparently my car can park itself, but I'm too nervous to try. In our future, it will be this same monitoring and communication that is extended to interact with other cars moving us to self-driving cars. And actually, we're almost there. We're seeing, some of you may even have cars that self-drive for a part of your journey. So we're now seeing a similar evolution in finance. And you may already be living it. Think about finance 20 years ago. Finance and accounting was largely about closing the books. Compliance, reporting to stakeholders, budgeting was all about managing costs. Finance was often known as the office of no. But this has changed, and there is much more to come. we are business partners today with our lines of business. I'm sure many of you are using driver-based planning or rolling forecasts. Now we are on the verge of new technologies, adding new ways to help drive the business. So while the previous generation may have been known as the office of no, modern finance is really about saying yes and enabling the entire organization to achieve new heights. Let's talk about some of the new demands and technologies. The finance journey is very much like what we've just described with cars, where the role of finance teams has really evolved and resources are reallocated to address the digital economy and ensure their organizations have the tools and processes required to beat their competition. Whereas historical finance groups were largely compliance and regulatory focused, 21st century finance teams have really worked hard to automate and streamline legacy responsibilities and to focus as much of their time helping make important capital, operational, or revenue creation decisions. And what we're seeing today is that that role is to ensure all stakeholders can access and process data and information and enable effective forward decisions with, for example, unbiased machine learning helping to drive forecasting, for example. Now, I want to focus in on finance transformation. To do this, organizations must have an effective management layer in place, and it's important to understand the difference. Transactional systems such as enterprise resource planning or ERP are best used to run the organization at an operational layer. There really can be any number of these systems in a global organization and coming from multiple suppliers. Of course, the business activities that ERP systems help automate and track include manufacturing, supply chain management, project management, order processing, and of course, finance and accounting, like general ledger, fixed assets, accounts payable, accounts receivable, etc. The CPM or EPM solution, the acronyms are interchangeable in this space, is a management layer above all transaction systems. Essentially, CPM manages the organization and monitors performance across the enterprise with the goal of improving business performance. A CPM system integrates and analyzes data from many sources, including, but not limited to, front office, e-commerce systems, back office applications, data warehouses, and maybe other external data sources. Companies with a single, unified, effective management layer in place can truly deliver world-class performance. So, what does that look like? Well, I would just like to paint the picture of the kind of results that world-class organizations achieve. And I'm using here the data from the Hackett Group in their World-Class Advantage research of 2020. So I'll just highlight three statistics. You'll see there are many areas across here where these organizations demonstrate superior performance across three headings: efficiency, effectiveness, and experience. I would just like to call out in efficiency, the 59% lower transaction processing as a percentage of revenue. Now, this is from organizations who have streamlined their process and reduced manual intervention to a point where they see cost improvements. And around effectiveness, 98% more FTEs allocated to business analysis. This is really key, moving valuable resources away from effectively data processing to actually doing what they are qualified to do and helping make improvements in the performance of the organization going forward. And then also 43% more time spent preparing reports that address future actions. This is taking the analysis to another level by presenting the findings in reports which can be consumed by the relevant decision makers. And then in the experience area at the bottom, you'll see that these organizations are more likely to have strong business partner relationships across their organization and more likely to be seen as agile in responding to future challenges. Now, digitalization is coming to us all. But I wanted to refer to Accenture's research from their CFO Reimagined study 2021, where they highlight the areas of finance which will see a digital shift. Today, there are many areas where professional staff time is focused, such as processing transactions, perhaps for supplier payments, employees or customers, transaction accounting or reporting. Now, according to Accenture, tomorrow, we will see a shift in many of these areas to greater than 80% digitalization and a corresponding shift for professional time to the critically important areas of planning, analyzing, and advising the business. That's those sort of slightly larger surrounded circles at the top there and the two at the bottom. So what is holding us back? What is holding organizations back? And here are some of the items that I hear the most. Many finance executives struggle to get the executive sponsorship for change to an area which might be perceived to work, or perhaps the culture and skills are not right at this time to take on the change that's needed. About 50% of finance executives that I've spoken to do not feel that they have the time and resources to meet strategic demand. And despite billions probably invested into technology, many finance teams are crippled with manual processes, moving data, and really operating with brute force, taking time away from value-added activities. And then legacy CPM applications and potentially new ERP investments. A number of areas in this topic, which I'm going to move on to talk about. And really, I have a question for you. Have a think. Are there other items that you would put in this list? I'm sure there are many more that you could add, but let's look more closely at the challenges. Now, as finance leaders, for you, it's true that you often face a diversity of these challenges at the same time. Now, you have to deal with external factors that impact from outside your organizations, like the recent pandemic, political events, or even those regulatory changes that I mentioned, like lease accounting. Then throw in a large container ship getting stuck in the Suez to really upset supply chains. Of course, as your organizations grow organically or via mergers and acquisitions, what we're seeing is that you have to deal with the internal complexities associated with more enterprise systems, integrating those systems, and making use of those systems for reporting and analysis. And finally, you have to handle the complexities within the organization and to move away from siloed decision-making, which really often happens, especially in environments where access to data and insights are also siloed. And there's a lack of agility to quickly react at the speed of the business. I thought at this stage, a little bit of self-reflection might be interesting. Where are we actually after 20 years of finance transformations? There has, of course, been progress in many areas, and I'm sure many of you would say you've done a lot of work in this area. You've invested in a lot of technology, and you've made a lot of progress. However, according to PwC in their Leading Finance in the Digital Era study, many organizations are still spending 66% of their time gathering data. And FSN, in their Future of Analytics in Finance survey from 2020, found that a staggering 86% of analytics efforts are missing the mark. So this is investments in analytics which have not delivered what was fully expected. According to Gartner, it's the bottom item here, according to Gartner, only 13% of organizations can identify performance issues before they hit the financials. I think this represents huge risk. Now, on the very right, another statistic from Accenture. This is from the CFO Reimagined study. And this was 76% of the CFOs they surveyed agreed that without one version of the truth across their business units, their organization will struggle to meet its objectives. So I think this is very compelling around the direction of travel for finance. And it's more imperative than ever to get a single, unified and effective management layer in place. And so before we can move forward to address strategically how the Office of Finance can change, I think it's critical for finance teams to try and understand the root cause of these challenges. And when we look across our customer base, and when I hear stories from organizations I speak to, time and time again, particularly at the management layer versus the ERP layer, we come back to the theme of connected finance applications as the major source of pain for finance teams. These kind of legacy point solutions which need to be connected. Now, make no mistake, these point solutions, whether on-premise, in the cloud, or in some hybrid strategy, have been that source of transformation for the past 20 years. They were great. They were great at the time that they were taken on. Now, looking at this system landscape already looks complex. You know, it's really where each of these kind of handwritten black lines represent risk and cost, as well as data latency and redundancy. But if we were to then map the people involved in these processes, then you really get a picture of how difficult this is to be aligned. And when all these challenges exist, then often people become the glue. But in today's environment, especially as the pace of change increases, finance teams cannot be burdened with the technical debt, risk, and complexity of stitching these processes together just to do the basics of their job, let alone take steps forward to really transform finance into an agile, business partnership focused organization that it needs to be. Because finance teams now have no choice but to lead at speed, to help our organizations survive and thrive amidst all of that inevitable change around us. But we cannot get there if we continue to try and solve for the complexities in our financial systems and processes the same way we've been trying for the past 20 years. Which is why we've seen finance teams take steps over the last few years to conquer these complexities. Now, we've seen the transformation taking place to manage complexity in financial close and consolidation, and also performance reporting to create a solid book of record. This is work that's very process focused, regulatory in nature, and often under significant pressures. We've also seen a focus with finance leaders on enabling people and process through business partnership by taking steps to conquer complexity in planning and forecasting processes. Again, this is work that's been taking place for several years now, but some organizations are finding it extremely difficult to scale with legacy tools. And while many organizations continue to make investments to simplify and scale these processes, we are now seeing a new inflection point building for the Office of Finance to take the vision of the virtual close, or even the continuous close, and bring it closer to reality, to understand what is happening now and take action to drive performance before month end. And we see financial signaling, or you could call them early warning signals, to provide data points at the right time as the next critical innovation to help finance teams break through this inflection point and break free from our monthly performance cycles. This is right time finance. But how do we get here? Well, next, I think it's important to look at two tracks of evolution within finance: the people, skills, and the process itself. First, let's consider the people. Accenture, in that same CFO Reimagined survey from 2021, examined the three hats of the modern CFO on the left here. They said that CFOs have in the past been seen only as accountants, very focused on how the organization did, examining actual data and sometimes functionally siloed. Today, CFOs are, of course, partnering with the business. They are more forward-looking with a combined focus on financial and operational metrics, and they use more analytical skills to align to the business. But the future calls for all this, plus the ability to enable the organization strategically to increase the productivity of finance, to move to a data-driven model and apply digital technology. I've even seen in some articles a call for the CFO acronym to be changed to Chief Future Officer. Then moving to that right-hand side, Accenture highlights the shift required in the skills within finance from transactional finance and accounting focused to an increased level of responsibility with greater use of digital technology and more business insight to really become intelligent finance. Now, let's look at the required evolution of finance to reach this level of intelligent finance. So how do we get here? The evolution takes us from the close and consolidation, the book of record, then to business partnering as capabilities expanded with planning and forecasting. Performance reporting has led to more decision support with self-service visuals and ad hoc plus detailed analysis. But to get here and do it at scale, finance teams must take steps to conquer the complexity of their financial systems and processes, so they can really get those cumulative benefits and leverage from modernizing their processes. These include, taming the IT complexity of excessive legacy systems, managing complexity in financial close and consolidation, aligning budget, planning and forecasting processes to operational plans, driving efficiencies in performance reporting, moving ahead of the month-end cycle, and then to decipher those financial signals in weekly and daily operational data, and then take action at the speed of the business. Let's quickly deep dive on financial signaling, which is for finance teams to leverage the financial intelligence that's core for their monthly financial processes, such as hierarchies, dimensionality, translations, rates, and then blend it with higher velocity financial transactions and operational data from multiple sources. So with this unique capability, finance teams can begin to analyze these signals on a weekly or even daily basis to compare how their key metrics and KPIs are pacing versus their forecasts, and of course their expectations for the month. This includes information on suppliers or customer orders and shipments, as well as core financial data around working capital metrics. But really, this could apply to anything that's critical to your corporate finance, ops finance, brand finance, or even sales finance teams. Now, most importantly, based on these signals, actions can be proposed ahead of month end to continually drive performance. This leads me to my 5 steps for unleashing finance. And as we think about this and evolving from fragmented CPM solutions, I've broken down the transformation process into these 5 steps. Of course, many organizations go about implementing some of these steps based on what works best for their business, but I've put them in this order. At the center of how to unleash finance is a single platform that can unify and simplify your CPM processes. You will also want to enable finance and the business with some critical abilities. Now, please forgive me for the small type here. I must make that bigger next time. But really, around reducing spreadsheets, spreadsheets are a fantastic tool, and I'm sure they're not going away anytime soon, but they really add risk when they are used to support enterprise processes. Consider a platform that can help you reduce spreadsheets by automating any process that is standardized, defined, and repeatable. On collaboration, enable collaboration. Ensure any single platform also provides fantastic collaboration solutions. Monitor tasks throughout the close. Share comments on status or variance explanations. Of course, leverage a platform that enables business partners to walk through their various processes in a simple way as possible while providing them a controlled experience. Enabling detailed planning using drivers. And it's really important to consider a platform that enables the ability to plan at a detailed business driver level, or factors that physically impact the business. For example, you can plan at the customer level, volume, unit price, and dynamically see the financial impact through your financial statements. And then align finance and operations. Of course, it's important to consider a platform that gives your business partners the ability to manage their own plans, access them, make changes, and hold their teams accountable without requiring finance all the time, effectively, to make the changes. You really want to enable business partners. And then with that foundation in place, you can begin the journey to unleash finance and lead at speed. So let's go around the steps. I think very, very important step, and one that is pretty obvious, but it's important to know the business and really determining your business objectives, both by line of business and function, and of course then understanding what the key drivers are and understanding the success factors that you really are looking for. That's really the solid starting point here. But then streamlining the close, automating data loads, and then automating and aligning those account reconciliations for reporting, automating as much as possible around intercompany and integrating tax provisioning as well into this process. The third step is driving agility in planning and forecasting. And it's really about putting less focus and time on annual budgeting and making it more regular. Really implementing rolling forecasts on a quarterly or monthly basis, and then importantly aligning financial and operational planning. And then automating reporting, really getting that to a stage where it's automatically in view for your users. You've got the graphical capability in dashboards, very quickly getting access to information and then being able to drill from there without any delay, any waiting. And giving power users the ability to do some of this themselves. Ad hoc analysis is really important. And then the final step, leveraging advanced analytics, really putting some of that most recent technology into play and deploying predictive analytics into forecasting, being able to make more informed and intelligent decisions about where you're going, considering some of the machine learning capabilities that are coming into the market, and then being able to analyze trends, scenarios, and look at the worst case and the best case, those kind of things that could happen. Again, when some of the events happen, like the Suez Canal, you're able to kind of play with the scenarios. So the key to all of this is the platform, and that gives me the really great opportunity to introduce OneStream, and that's why we built OneStream, why we built the platform as it is. And I can tell you that we set out to develop a next generation intelligent finance platform, a single extensible platform that delivers multiple solutions in one application. The platform supports best-in-class financial consolidations, reporting, planning, analytics, and world-class financial data quality, all in a single application that replaces multiple legacy products. Now, because all these processes are in one application, it simplifies the user experience and the technology environment significantly, because there is one product to learn, own, use, and maintain. And while we've designed our platform to address the most sophisticated problems that large organizations face today, we've done so in a way that makes the end user experience as simple and easy as possible. Extensible dimensionality is unique in OneStream. And that may not mean anything immediately to you, but I've seen so many organizations in the past having to run 2 or more, often many more, consolidation processes for management and statutory reporting, or for kind of centralized and then the business units of an organization, really due to different dimensionality, and then multiple planning processes for the same reason. OneStream unifies all this. And lastly, our platform is designed specifically to allow our customers to extend it. And that means we can deliver additional capabilities such as predictive analytics, people planning, account reconciliations, and much more, easily and without the disruption that has plagued previous generation EPM deployments. In fact, we are the only CPM, EPM vendor in the market that has been able to deliver on the Apple App Store concept with the marketplace mentioned in the center of the cloud there. And our customers love it. So I'd really like to very quickly highlight what makes OneStream, and that is, just from day one, I'd like to tell you that our company mission has been about 100% customer success. We're really fanatical about it, and it means everything to us. We're certainly not perfect, but we'll do anything to make sure our customers are successful. And our basis of our organization is that you can ask them yourself. The founders of OneStream, Tom Shea and Bob Powers, are true visionaries in the CPM EPM world. They founded, built, and developed companies and technology that remain core to the Hyperion Oracle EPM products well over a decade later. The OneStream platform was built based on their deep knowledge of finance and financial systems. We believe delivering 100% customer success requires domain knowledge in every area of the organization, and top talent from across the industry has been attracted to join OneStream into all functional areas. One of the keys to 100% customer success is having a truly world-class support team. And at OneStream, we pride ourselves on the highest level of response. And then, finally, our commitment to 100% customer success is demonstrated in the analyst recognition that we receive, based primarily on surveys of our actual customers. But we've been recognized as a leader in EPM by Nucleus Research, Dresner Advisory, BARC, BPM Partners, and as a leader by Gartner. So we're also very highly ranked in Gartner's peer reviews from actual users. We now have over 700 customers, and I'd just like to highlight some important points. The majority are global organizations with sophisticated requirements from all industries. We're most often deployed at the corporate level for use across the organization, rather than as a departmental point solution. And 70% of our customers have replaced multiple legacy solutions. Now, just here, I'd like to highlight 3 customer stories. McCain Foods there at the top is a great example of a OneStream customer. If you've not heard of the brand, they sell a lot of potatoes, French fries, and actually 1/4 of the world's supply to restaurants such as McDonald's. So if you've been in a McDonald's lately, you may well have had a McCain French fry. McCain needed to react very fast in March 2020 as the global pandemic came in. And they used the power of the OneStream platform to switch to the daily information and analytics, the financial signaling that I've mentioned, so that they could quickly adapt their business to sell more volume to consumers through supermarkets, where the demand was shifting, because of course, restaurants were closing or were closed fast in pretty much every country. Then I want to talk about Melrose PLC in the UK. They buy good manufacturing businesses with strong fundamentals whose performance can be improved. And Melrose needed a unified CPM solution that not only reduced the burden of maintaining multiple products and integrations, but they needed the agility to adapt, also to what they need to do going forward. And they also needed complete visibility into data, metadata, and process changes. And Melrose spoke at a customer event recently, and they talked about their very recent 7.4 billion acquisition of another organization, and how important it is for them to have an effective management layer in place with OneStream. Back to that concept of management layer versus the operational layer. They are very acquisitional, and they will always have multiple ERP solutions. There's no strategy to bring ERP to one. And so they have an ongoing requirement to quickly integrate and carve out subsidiary companies on an ongoing basis. And then finally, I'd just like to talk about KLM, the airline group. and actually who just went live on a big part of the OneStream solution just recently. They selected OneStream to replace the complete landscape of financial and business planning and reporting within their organization. And this varies from the high-level strategic planning and modeling to very detailed root profitability analysis. And root profitability is, of course, key in their industry. It's now down to a matter of hours in OneStream from what used to take them 1 to 2 weeks. And after the pandemic, cash management became critical for all airlines, but particularly here as revenues disappeared and refunds were requested in volume. And OneStream was the technology that helped them to execute on their board strategy and really continue to operate the way that they do. So finally, I would like to mention a little bit about the value that OneStream delivers to customers. And this can be seen by the impact of their use of the solutions. Companies like Hunkemoller, the clothing manufacturer in the Netherlands, who saved 36 days per year from their close process. Or Inteva, the global automotive supplier who saved over $1 million over 5 years with OneStream. And then Curtis Instruments, who interestingly, and linking back to my car transformation analogy, has led the way with innovations in motor control, battery management, and vehicle instrumentation since 1960. They improved their intercompany eliminations process by 70%. And then earlier this year, our value transformation team carried out a wider survey of our customers and calculated the average benefits that they've achieved. There were many benefits across all areas of the platform, but I will highlight just 2 here. OneStream's solution helped customers improve data integration processes by 80% and led to an average improvement of 74% in the time to prepare reports. So, with that, the OneStream platform really delivers for our customers, and perhaps it could for you too. With that, I would just like to thank you for listening, and I believe we may now be able to have a look at 1 or 2 of the questions.
Nick, thank you for that. Really insightful session there. Cheers. We've had quite a few questions come through. Let me jump straight into them. The first one I've seen has come through from Steve, and Steve is asking, how are you seeing scenario planning has changed over the last 12 plus months? Do you see more demand for deeper and more dynamic reports as a result of turbulence?
I'll take that, certainly, and we do, and I think we've seen a huge shift to a huge shift in interest to scenario planning. That's true. I think many traditional planning and budgeting models kind of got thrown out overnight as the pandemic hit, and I've spoken to many organizations where they had to switch to sometimes several iterations in a day of their their planning cycles, and they really had to kind of especially around cash management and looking forward at working capital, those kind of areas. So yeah, I've seen the need for more regularity in scenario planning, and also deeper and wider. It's really had to open up to a lot of different capabilities, and that has driven a lot of organizations to kind of review what they are using in terms of the technology, because a lot of this kind of speed of reaction just can't be done certainly can't be done in spreadsheets, and some of the older systems would really struggle with it. So it's really beginning to make people think, we've got to go deeper, we've got to go wider, we've got to do this more regularly, and we can't be spending hours and days doing this. We're asked for information very fast.
Brilliant. Thanks, Nick, and thanks, Steve, for the question. Second question from Gloria, who asks, do you typically see organizations taking a big bang approach to implementing EPM, or do they roll it out in phases?
Mark, I'll let you go for that one.
Sure, thanks, Nick. Yeah, it's an interesting question, because it's really all about time to value, and I think that what we've seen with our customers is that they tend to take this approach on a phased basis. So they tend to say, hey, look, what is our burning platform? Let us solve that issue with the first phase. Let's deliver some value to the organization as quickly as we can. And then let's get that bedded in for a couple of months and then move on to additional phases. And those additional phases tend to come about based on the first phases that have been implemented and kind of the questions that come out of those. And if I think about one of our UK customers, Dyson, they purchased OneStream for consolidation. So they implemented consolidation. They were getting great benefit out of the management reports that they were getting out of that solution. And then they wanted to implement corporate level FP&A, which they did. And what they saw then was they were starting to get a lot of questions coming out of that corporate level FP&A solution. Why are we employing more people here? Why are we starting more of these projects? You know, what are they all about? So they wanted to go down to a kind of lower level of detail. So they started off then on phases 3, 4, 5, where they said, well, let's implement a people planning solution where we can go right down to individual person and justify why we're employing those people, moving those people within our organization. Let's build a travel planning solution so we can keep a handle on the costs of travel. Let's build an R&D planning solution so we've got a really good handle on the projects that we want to deliver in the future. If you think about Dyson, you know, and you may think of them as a manufacturing company that manufacture vacuum cleaners. They're not. They're a technology company, and their big the big benefit that they bring is all around battery technology. So now they're moving into electric cars. So how do we justify doing that with the projects that we've got into play? So they build a project planning solution. And now as a last, not as a last phase, the latest phase, they're moving into operational planning. So getting down to that much lower level detail of information at a transactional level that they can deliver to people to answer the questions that they will have when they're looking at that higher level set of data. So very much a phased approach is our recommendation. We've seen companies do big bang, but absolutely a phased approach.
Brilliant. Thanks, Mark, and thanks, Laura, for the question. That actually leads nicely into a question that Ali has asked. Do you see any common challenges with businesses aligning financial planning with operational?
Yeah, I'll take that. And you know, I think I mean, we do have a lot of common challenges. You know, I think we you know, I hope that came across in the presentation that we deal with that certainly from OneStream perspective very uniquely in that we you know, and I mentioned something called extensible dimensionality, which you know, it probably is a term that is very alien to some, but it does allow an organization to unify that, you know, those two parts of an organization within the structures. And you know, what I've seen, you know, in a lot of organizations I've spoke to is that, you know, really being able to align the business, you know, both operationally and financially is very difficult when you can't share certain elements of the dimensions that are used. And you know, you really end up with that you have to go down the road of having different hierarchical structures and running everything against them, and then kind of manually reconciling that in some form to try to work out how to bring it together. So, you know, for me, there are a number of challenges there, but what you particularly need is the ability to share and to reuse components within your dimensionality structures that allow you to then have multiple hierarchies coming off for your different areas of reporting that, you know, can all be done within one single and aligned application.
Brilliant. Thanks, Nick. A question from Annie who asks, how much earlier before month end are finance starting to have these inflection points? I think she's referring to one of your early slides.
Yeah, we've got you know, organizations getting, you know, literally on every day, they're getting daily signals. And you know, what we're finding is that this is critically important at times. It's you know, rather than waiting, which often happened in the past, waiting until the close is complete before actually finding out some things, that actually you're able to work out, well, these are the kind of things that we need to know about. We need to know about them quite regularly. And you know, it may be even just at the beginning of the month, I need to know if something is changing. If something's changed that you know, has a critical impact on a decision we're going to take, I want to see it. So you know, and I mentioned the McCain example, but we've got plenty of others where they've got that down to it could be that they decide weekly, but in most cases it's daily, and there are certain things that you can just surface and say, this has just changed. Is that you need to know this, and then you can make a decision based on it. So the answer to the question really is it's daily, and it can be as early as the next day after the close each month. You can get that information.
Brilliant. Thanks for the question. In fact, that leads really nicely into a question from Rich. And Rich has asked, are the planning forecasting tools useful for fast-moving or daily decisions, or are they more aligned to annual or long-term plans?
I'll take that, and Mark, if you've got anything to add, you can perhaps go. So what I would say is that we are particularly seeing an interest in fast-moving decision making. And so the planning tools really can help an organization to put in the process that they want to have. I mentioned when I talk about the signaling that we're able to surface information on a regular basis in between the processes, but the planning process can be designed really to the way the organization operates. And so it very much recognizes the fact that there are regular, kind of possibly monthly, quarterly, annual budgeting cycles, but that in between those there might be information that's needed, like we've talked about, that just kind of gives early warning signals. So I think both applies, is the way I would answer the question. That you can certainly have your very structured processes in place, but you can really surface information when you need it at the time that it happens, to make decisions faster.
Yeah, that's right, Nick. And our customers started off using OneStream. If we go back a few years, they started using OneStream for the traditional planning processes. So we've got examples of mining organisations that are using OneStream, looking at 25-year or life of mine horizons. But then they wanted to connect that longer-term view of the organisation with the shorter-term 3-year and 1-year view. So have a single platform where all of that information is naturally integrated. And then, as you said, Nick, as we've moved then through the evolution with our customers, we've seen them now, and OneStream has developed, we've seen them now moving to that daily and that weekly signalling, whether that's McCain Foods or whether it's BDO, the services company over in the US, where they're loading daily information to get that daily insight into things. If you think about it, if I'm a CFO and I get my report on the 6th or the 10th of June, and I'm looking at May's numbers, there might have been a problem that happened on May the 5th, and I don't know about it for 4 or 5 weeks until 4 or 5 weeks afterwards. But if I'm getting those daily insights or those weekly insights, I'm able to see that potential issue much earlier and nip it in the bud and make sure that it doesn't multiply itself with the organisation and cause a bigger problem several weeks later.
Brilliant, thank you. I think we have time for one last question, which has come through from an anonymous attendee who asks, what would you say are the current hot topics when speaking to customers about EPM?
Perhaps we can both give a bit of an answer there, can't we, Mark? I think. I would say there is a clear trend in organisations to digitize finance. So we are seeing we're seeing that because because of some of the issues that I highlighted in the presentation, that there is a kind of a digitalization is coming everywhere in life, and so there's a desire to do that in finance and finance processes, but also to save money. Because there's a recognition that it can be expensive if you don't go down that route. And so what we're seeing is that there's a need to digitize and let the systems do more of the work, because they are capable of doing it. That's really the evolution that I think Mark helped explain as well, that we are seeing that now systems can take on a lot more for us. And we really can use people who are very qualified to analyze and understand where the business is going, to do just that, and let the system take all of the strain of kind of processing and coming up with some of the information that's needed. Mark, you might want to add.
Yeah, no, absolutely, Nick. I mean, it's there's a couple of things that we see with finance. Their ability to be agile and their ability to be a business partner to the rest of the organisation. And if I go back to that diagram that you put up, Nick, of all those different solutions and those hand-drawn lines, it's about taking the manual out of the process. It's about ensuring that you have the correct numbers, the reliable numbers that are one source of the truth, and that your finance colleagues aren't spending time doing things that really, they don't want to be doing. Moving data about, checking that when data arrives in the planning solution, it ties up with what's in the actual solution, and vice versa. And automating all of those processes so that they can spend their time doing what they're really good at and what they spent a lot of getting qualified for, which is working out how to move the business forward and how to be that business partner. So I think it very much revolves around those points, yes.